Good evening, everyone, and welcome to this evening's discussion on ethical business and the moral responsibility of tax. I have to say I'm very impressed that you're here on such a nice evening to listen to a subject that can sometimes be perceived as both difficult and dry. So congratulations to you all, and I hope we will reward your effort by our own efforts. My name is Barbara Ridpath. I'm director of the St. Paul's Institute, and I happen to think this is possibly, particularly in the midst of a general election, one of the most important issues we can be discussing about what fair tax looks like, what just tax looks like. And even I am going to have to keep my voice up, George says, and that's why he's in the back making sure I do. So my only job this evening is to introduce your speakers. They will each speak for 10 minutes, and then I will come back up here and moderate a question and answer session with them. So do please, as they're going along, think of questions, because we'd like it to be a really live debate and discussion with the audience as well as the speakers. I will have some of my own. I'm never short of questions, but we really want to hear what you think on these issues. So do prepare and listen well. We couldn't have three more qualified speakers. They are all tax experts. And our first speaker will be the Reverend William Morris, who I believe goes by Will. And he has been in tax most of his career, but he is also an ordained minister. So it's an interesting combination, and I think probably brings very much to the subject and can wear whichever hat he pleases tonight. Our second speaker will be Janine Juggins, who is actually in tax at Unilever. And those of you who know Unilever know that it thinks very hard about how it behaves on a large number of subjects that have to do with corporate social responsibility and environmental responsibility. So I think it will be particularly interesting to hear what Janine has to say about tax responsibility. And our last speaker is Ewan Livingston, who works for ActionAid, who will take yet a different position. It's not a debate in the strict sense of the word, but he will have a view that comes from an NGO's position. So I think we'll get three very different perspectives on the same subject. I hope you find it interesting. My job will be to keep them to time, and you will hear from me again after the three speakers have finished. Thank you.
Thank you very much, and let me also add my welcome to Barbara's for coming in on such a beautiful evening to listen to such a potentially dry subject. As Barbara said, I wear a number of hats, and I'm in a confusion of them this evening, so I think I probably ought to make clear that I speak entirely on my own behalf and not on anybody else's at all. And let me say a couple of other things in opening. The first is, while I am, yes, a Church of England priest, and we're in a church, I think it's probably helpful to talk about this mostly in secular terms, but feel free to challenge me on the priest tax lawyer thing in questions. It wouldn't be the first time, and I suspect it won't be the last, and it's certainly what I need to keep me anywhere near honest. And the second thing that I want to say, and this is an important foundation, because while I am definitely a priest by vocation, I am a lawyer by training, and words are important to me, and I think that the words that we use and the nuances that those words have are crucial, so bear with me as I go through this. But anyway, the other thing that I wanted to say in opening, just so we clear this out of the way at the beginning, is I have interacted with the OECD on the so-called base erosion and profit shifting project from the very beginning, which is to say over almost 4 years now. And I have been very clear, speaking on behalf of business, that we acknowledge that there has been tax planning over the years where, for example, the substance of a transaction or where the value is created has become divorced from the taxation, and something needed to be done about that. And equally, that in other areas of taxation, that globalization, the way that companies operated, had moved well beyond where the international tax rules had got to. And again, something needed to be done to that, and that has fed into the public anger that we see about tax. And we do need to address that, including by changing the rules. So I just wanted to be very clear about setting that. At the same time, however, in order to progress the conversation, I think we need to be clear about two things. The first of these is that the business of business is making things and providing services that people want to buy. If businesses do it well, then some really, really good things follow from that. People have good wages, they have secure jobs, and yes, tax revenue is produced, but it is that way around. It's not the other way around. And the second, and this is the more controversial point, is that for a business, you have to understand that the way the business thinks about tax is as a cost. And it is a cost which needs to be controlled at some level, like other costs. Now, I'll unpack both of these a little more, but I think if we don't understand that, and if we think that there is somehow a perfect company out there that thinks that paying tax is a good thing and the more the better, then we're not going to have a conversation where we come together. So I think just to base the conversation, we need to think about that. So the title of this event is Ethical Business and the Moral Responsibility of Tax. There has been a lot of talk about the morality of taxation, but I have to tell you that it is not completely clear to me that you or I or a company has a moral obligation to pay tax. They have a legal obligation to pay tax. And that's an important distinction. And I think that is a distinction that actually we should all want. There is no doubt that governments elected by people have a right, indeed an obligation, to raise tax revenue to fund aspects of the state, and taxpayers have a legal duty to pay that tax, but it is a legal duty. Why? Or why am I concerned about that? Well, I think, as with the other word that's sometimes used in this context, which is fairness, moral is a very fluid, very subjective term. My view on what's moral may be different to your view of what's moral. And likewise, our views on what's moral may well change from day to day, and you cannot run a tax system on that basis. You need clear, consistently applied law that people must follow, year in, year out, not something driven by shifting views on what's right and wrong today. Now, that said, fairness and morality do, indeed should, play a part in the tax system. So let me try and explain that from what I've just said. The problem is that we view tax as mostly being about the collection of tax, about the paying of it. But I actually view the tax life cycle, if you can call it that, as having three stages. The first, where tax policy is formed. The second, where that policy is turned into law. And the third, when that law is administered by tax authorities. In the first of those areas, it is entirely appropriate, in fact, perhaps an obligation, to ask questions about morality and fairness when we are forming tax law. How do we feel about inequality? How do we feel about those at the lower end of the income spectrum who often struggle? Those items, moral if you will, should be considered when policy is being formed. But once the decision is made and the law is written, those factors, I do not believe, should then be considerations. At the point of writing the law, the obligation of the government is to write something as clearly as possible that taxpayers can follow, which leads to them paying the intended amount of tax as objectively defined. But it has to be objective. Think for a moment, how would you ever comply with a statute that effectively says you must pay the fair or moral amount of tax? And likewise, in tax administration, fairness and morality, I don't think, are the appropriate concepts. The law should be applied entirely consistently to all taxpayers in a reasonable way without any favor or disfavor being shown to any taxpayer. If you will, it's about the rule of law, and it's the rule of law which in the end will get you the results that you want year after year after year. Let me also come back to the word ethical for a moment. Again, it's another of these slightly heavy words that sometimes gets used to beat people up and to judge them, because again, it is a word which is rather fluid and can be subjective. But again, I need to be very clear that in saying that, I'm not saying that as a result, anything goes when it comes to taxes. No, absolutely not. So let me spend my last few minutes trying to explain that. As I'm talking in a church, I think I can fervently say that I believe that work, even for-profit work, is a crucial part of the ecosystem that is God's creation. But by the same token, it is part of that ecosystem, not detached from it, and exists only in relation to the other parts of it. So business, and people in business, and to bring that down still further to this evening's topic, business tax, are part of an ecosystem, a community, a society with which they have to interact, and which they have a responsibility to nurture and to sustain, rather than to treat as something unconnected to anything else, or as something to be used and then discarded. In the business that I used to work for until recently, in tax, we believed that we had two obligations, and we explained those obligations in the following terms, as being about the stewardship of corporate resources and the support of an effective tax system. And then we applied those two obligations to three sets of circumstances: to compliance, to planning, and to policy. I'm not going to go into those in detail, not least because you'd be here for quite a long time, but I just want to make a couple of points about that. First, these obligations didn't in any way alter the fact that the purpose of the business remained to make goods and provide services that people wanted to buy. And it didn't alter the fact that tax remained a cost. But it did absolutely guide our approach to compliance, to planning, and to policymaking. So stewardship of corporate resources most definitely meant paying no more tax than the law required us to pay, but it also meant looking further ahead than the current quarter and not making aggressive tax decisions which could hurt the business's reputation or its bottom line later down the road. Likewise, support for an effective tax system meant insisting upon the rule of law rather than a more subjective standard such as morality or fairness. But it also meant not stretching the law to its limits and not coming up with outrageous interpretations. So application of those two standards, those two obligations, placed tax firmly in the ecosystem rather than outside of it. It illuminated the interaction with that ecosystem and the responsibility that tax professionals have both to their business, to make that business as successful as it can be, but also to the tax system, and through that to society more generally, to ensure that the system carries on working as intended, day after day, month after month, year after year. We did undoubtedly lose some sense of that balanced obligation in the tax planning that I acknowledged at the beginning, an obligation to our business, but also to the ecosystem of which it is a part. I think we can regain that balance, but it needs a couple of things to happen. First, everyone needs to understand and be realistic about how business works. Second, our aim should be clear law that is changed when it needs to be and administered with absolute impartiality and with complete objectivity. And third, we need to encourage the recognition that business, and within business, the area of tax, are part of a larger ecosystem, a community, a society in which they must exist and which they must help to sustain. And to get to the last of these, we need to reach out to each other to talk and to explain. My concern is that potentially judgmental words can make it harder to get there. But I do truly believe that open conversations like the one I hope we're going to have this evening can help move us towards that goal. Thank you.
I'll do my best. Okay, I'll have to also do my best in another area because I prepared some slides. So now I've got to remember that you're not going to have some pictures to look at when I'm making all of my points. So hopefully you can hear this. Really distinct. Okay, good. I thought I'd start out with a few scene-setting remarks. The first is around why do we actually pay, or in some cases receive, taxes? They pay for public goods and services, that's the obvious one, and for making investments for the common good, whether that's in physical infrastructure or in human capital. They also play a role in redistributing wealth, whether that's between income and capital, or between generations, or between more well-off countries and lesser well-off countries. They're also used to make sure that we price things properly, things called externalities. So, for example, that we don't get to pollute without any consequence, and to drive changes in behavior. I think all of you will know about the plastic bag and the 5p charge and what a dramatic impact that's had. They're also used to encourage good investments, so credits, tax credits for R&D, research and development, and also then to provide a safety net in the form of subsidies or tax credits. So when we talk about taxes, we're actually talking about a huge spectrum of things that are there to do different, to serve different objectives. But I assume you're here today to talk about corporate income taxes. So now I'll go on to discuss that. A lot of the challenges, I think, with this topic of corporate income taxes and large companies have arisen in the international context. So multinational companies, by definition, operate in a lot of different countries, and therefore they have to navigate the fact that the tax rules in the UK might not be the same as France or somewhere else. And the international tax framework that was set up to sort of bring some sense and cohesion to this actually dates from a long time ago. So it was the League of Nations in the 1920s who started to put together the principles of how do you make these different country tax systems mesh together. And the reason they did that was that they saw there was a mutual interest in fostering economic growth by lowering the barriers to cross-border trade and investment. And the OECD then took that further with their Model Tax Treaty, but I'm afraid to say it's about 4 days older than me. And I'm not going to tell you how old I am. But it certainly was designed for a less global world and a less digital world. And so we're managing today as multinational companies in a framework that was designed in a different era. And that's what creates some of the conflicts we see. So if I take my own company, Unilever, it's not the biggest in its sector, but the annual sales of Unilever are equivalent to the GDP of a small country like Croatia. So if you now imagine that you are a tax auditor in a country and you're trying to understand Unilever, that's the scale of the issue that you have to try and understand. So multinationals are very complicated and they're big. They can create significant synergies, and that's one of the ways in which globalization has delivered benefits to consumers, because the multinationals effectively connect the pieces and arbitrage those differences. But in doing so, they use a lot of intangible assets. And again, I'll use the example of Unilever. So Unilever makes things like Magnum ice cream, Ben & Jerry's, things like Dove. So those are brands that have a lot of value. but they're not on our balance sheet, and they're also created in one country and might be used in another country. So part of the international tax challenge is, how do you allocate the value that's created by Dove and the Dove brand across all the countries that Unilever sells its Dove shampoo in, for example? And that's a really, really tricky challenge. So I'll come now to, I've described what the issue is in terms of its complexity and its challenges. I'll talk now about how a company thinks about, well, how do we navigate this? And I'll just refresh with Unilever's purpose, which has been its purpose for a long, long time since its foundation. Unilever was formed at the end of the 1920s, but its roots go back into the 1800s. And its purpose is to make sustainable living commonplace. And so that's driven, really, our approach to everything, including our approach to taxation. The other thing that we do is focus on consistent, competitive, profitable, and responsible growth. So it has a short and a long-term focus. So how do we apply that when it comes to issues of taxation? Because as Will made the point very well, it's not companies that write tax laws. It's governments that write tax laws, and then companies have a responsibility to comply with them. But the tax laws aren't always clear. And so what we did in our company is devised a framework, a set of really easy principles that allow us to test when there is some uncertainty. We look at these principles and we say, if we do this particular transaction, does it sit correctly with our principles? And they are around being transparent, avoiding the use of tax havens, how we conduct our relationship with tax authorities, what we think about tax rulings, and how our relationships with governments are, how we structure things within our group. So that's a very clear governance framework, and we have a scorecard system. So in other words, our tax principles actually are set out on our website, so you can go and take a look at them. They're in our sustainability section of our website. But we go further because it's not just motherhood and apple pie. We test any transaction that we think is sensitive against these principles and do a scorecard that has various levels of sign-off depending on whether the transaction is extremely sensitive or not. So that's Unilever's approach. I just wanted to close with a few words about the challenges for lower income countries, because obviously here in the UK we're blessed with HMRC, which despite the criticism that you might see in the newspapers, is actually one of the most respected tax authorities in the world. And that's not the case in many other countries, particularly in lower income countries. There are very low levels of capability. So the tax authorities actually have trouble collecting the taxes. And when they do collect the taxes, the money they raise doesn't always end up in the budgets where it should do, due to issues of corruption. And at the same time, they have challenges about wanting to grow their economy, attract investment, but they need to finance the budget. So they have to make lots of tax policy decisions about that. So in that particular environment, where I think a company can make a difference is by thinking about how it can behave in a slightly different way. And that's not to say it decides it can't follow the law anymore. It's not that at all. What I mean is going beyond what the law says. And I recently came across the example of Safaricom, which is the largest taxpayer in Kenya. And they, as the largest taxpayer in Kenya, and they're a mobile phone company, they get an awful lot of attention from the tax authorities. But what they could see is that the one of the big issues in Kenya is that not all the taxpayers are in the system. So what they decided to do, as one of the biggest companies, was to introduce a system whereby they wouldn't take on a new supplier unless the supplier was able to demonstrate that they were registered to pay taxes. And what they're doing there is using their scale to drive real change in the system. So I think that's a great example of how a company can make a difference. Obviously observe the tax law, I think that's almost like a given. But to go further than that and actually drive change. So that concludes what I wanted to say today. Thank you.
Thanks. I think I need to start on a point of clarity, actually. Barbara, when introducing us, said that you would get to hear tonight from 3 tax experts, which is not strictly true. You've definitely got 2, but I don't count myself within that category, I'm afraid. I'd like to think of myself as a development expert. Some people might challenge that also, but anyhow, I work for a development organization that's been active in the responsible tax debate over many years. Some of you, including my fellow panelists, know about why that is, but I'm sure that many of you don't as well. Ultimately, the answer is quite straightforward. Developing countries simply don't collect enough tax revenue at the moment to allow for economic and social development and to meet the basic needs and rights of their population. In recognition of this quite fundamental reality, countries around the world came together at the United Nations in 2015 and set out a series of broad and ambitious goals to tackle poverty and promote development, known as the Sustainable Development Goals or the Global Goals. And to achieve these will require not just a massive concerted effort from a variety of actors, but also considerable new sources of finance. The UN estimates that to achieve them will cost $1.4 trillion US annually. Our traditional development tool, aid, is and continues to be vital, but it's not, and in itself will never be sufficient. Even if the amounts of money that we had through aid were enough to reach that figure, aid alone can't form the foundation of sustainable economies or societies, or indeed governments. And these aren't just my arguments. There's a growing consensus that we're entering a new paradigm, moving away from a somewhat narrow focus on aid effectiveness towards a broader understanding of what needs to change to realize these ambitious development goals. Crucially, this is where we come to tax, we need new sources of finance at the domestic level, and to a large extent, that does mean tax. Developing countries need to raise more revenue, so where tax is currently avoided, we need to plug those loopholes. Now, tax comes from a number of different sources, not just corporates and not just corporate profit. But 2 key facts make corporate income taxes relatively much more important in the developing world than in this sort of context. First, lower income countries rely on corporate income taxes for, on average, twice as much of their revenue bases than do wealthier economies. Second, and perhaps more importantly in the context of today's discussion, which is about morality, alternative sources of revenue in poorer countries are often just not available. So whilst we in the UK, we might offset corporate income tax cuts with tax rises elsewhere, for example, on income, on capital gains, on property, that option is seldom available in the developing world. The alternative is taxing the poor, which is both impractical because the taxes are often difficult to collect and there's actually very little in many cases that can realistically be raised, but it's also morally questionable. So against that backdrop, ActionAid sought to ensure that developing countries can collect a fairer share of tax from companies operating within their borders as a crucial means of achieving development goals. With that in mind, there were 3 questions that were posed this evening on the agenda. The first is what legal responsibilities businesses have in relation to taxation. And I'm not really going to spend much time addressing this because the law is codified, it's generally clear, and where a business breaks the law through tax evasion, there are legal processes in place to address this. The second concerns what moral responsibilities businesses have. And I must admit that the question makes me somewhat uncomfortable since ActionAid doesn't claim to be an arbiter of moral responsibility, moral authority, and I personally certainly don't. But we do think that there is a moral dimension to tax. Our campaigning and advocacy work focuses largely on rule change and on government-led reform of the global tax system, but we also know that since there are, and necessarily probably always will be, flexibilities in the global tax system, particularly for those businesses operating across multiple jurisdictions, businesses will have some degree of choice concerning tax, particularly with regard to where they pay it. So in making choices about tax policies and practices, there is a moral angle that we think businesses should consider. It's notable that the public agrees with that position. In a recent ActionAid poll, 89% of the public agreed with the statement, tax avoidance by large companies is morally wrong, even if it's legal. Now, I won't pretend that polls are 100% accurate. I also won't pretend that it's perhaps unsurprising that the public responded in such a way to such a question. But by the same token, I don't think that any of us can ignore the fact that the public has been and remains acutely concerned by the tax practices of some businesses. And the Institute of Business Ethics, which conducts an annual public survey, really brings this message home. I think for the last 3 years, possibly 4, tax avoidance has been ranked as the #1 behavioral issue that the public believes businesses need to address. That's above executive pay, for instance. So it brings us to the question of what should businesses do and what can businesses do? And as I think both of the other panelists have already said, the answer is not generally straightforward. And since all companies are different, we don't think that there can be a universal code or guide to good behavior or one-size-fits-all approach. In recognizing that, ActionAid, along with our partners ChristianAid and Oxfam, published a discussion paper about 18 months ago entitled Getting to Good Towards Responsible Corporate Tax Behavior, and it sets out across a variety of tax issues from transparency and disclosure to tax planning and tax incentives, a range of propositions that we believe articulate what good practice might look like, as well as some indicative example behaviors. And we're using it as the basis of collaborative discussions with businesses jointly seeking to improve the impact of corporate tax practices in the developing world. Now, clearly, it's not a paper that's primarily focused on the issue of morality, but to a large extent, moral imperatives do underpin it, because ultimately, the paper, and indeed all of ActionAid's tax advocacy work, is about trying to ensure that developing countries collect their fair share of tax revenue in order that they can do the sort of things that I think, and I hope, that you'd all agree are morally right, whether it's fighting crippling poverty within their populations, educating their children, all of them, including girls, promoting healthy populations and providing healthcare for the sick. These are basic rights, basic human rights. So I'd encourage businesses to view tax through a human rights lens. These moral imperatives are closely interlinked with more practical considerations for companies, which brings me to the final question, which is, how do ethical businesses reconcile their duty to provide the maximum return to their shareholders with their responsibility to other stakeholders and to contributing towards a just society for all? First, I'd like to challenge the notion that the sole responsibility of a business is to its shareholders. That's often seen as a purist capitalist perspective, but actually I don't think it's even that, because any system that allows businesses to negatively impact external stakeholders, whether that's society or whether it's the environment, is a system that facilitates externalities and perpetuates market failure. More practically, in the UK at least, we have the Companies Act, which makes clear and explicit that companies are accountable to groups beyond their shareholders, even if the interpretation of the Act differs. But from the perspective of businesses themselves, I think that tax should be seen not as a sunk cost. Will said earlier that tax is a cost. He's absolutely right. Of course it is. But I don't want business to see it as a sunk cost, because it's an investment in the sorts of societies and economies that are conducive to commercial success for business. Tax pays for educated pools of labor from which businesses can recruit their staff. It pays for healthy workforces. It pays for modern infrastructure, for energy systems, transport, communications on which businesses, and particularly international businesses, increasingly rely. Janine made the point earlier, is tax revenue always well spent by governments on such desirable outcomes? Of course not. But that doesn't deflect from the reality that these most basic of rights can only be realized on a sustainable basis if they are underpinned by a sustainable tax base. I was earlier this week at a conference in the Netherlands at which Will spoke, and he emphasized the importance of different stakeholders in the tax debate understanding where each other stand. I agree with that. It needs to be our starting point, and this just about sums up where I stand. I don't want to simply bash corporates or to undermine individual businesses, particularly individual businesses that are seeking to adopt a responsible approach on tax. I also don't want to make the case that businesses should seek to maximize their tax bills, or that they should attempt to pay more than they owe. And third, I do concede that corporate taxation isn't some sort of panacea for the developing world, because it's not. But I do wish to make the point that there is a fundamental link between tax and development, and so yes, in my view, there's also a link between tax and morality. Businesses should seek to pay a fair share in the right places, not simply because a state compels them to do so, but because behind these obligations are real people who are impacted in a very real way by the consequences of corporate actions. That's why ActionAid asks businesses to assign greater attention to the contexts in which they operate, particularly those companies that are operating in the poorest parts of the world. I think a growing number of responsible businesses see this and understand it, and some of their actions, perhaps the case of Safaricom earlier, are reflecting this understanding. There is much more that can be done, but some progress is being made, and with powerful corporate voices speaking out on this issue alongside organizations like ActionAid, I think we can realize a better and fairer global tax system as well.
Sorry, I slightly failed at my job of timekeeping. I let them go on because I was interested in what they were saying. I think one of the things that's worked really well with this debate so far is that there was a lot of talk about how to share the wealth with low-income countries, and even tax can sometimes be looked at as a subject of self-interest. So getting us to think about it in the context of low-income countries, I think, is quite important. So thanks to Janine and Ewan for that. But I think I'm going to ask one question, and then we'll take questions from the audience. How do we get a public sentiment to do that at a time when in many countries people are beginning to say, use this awful expression, charity begins at home, and don't want to even give development aid to these countries anymore? They think that money should stay in the country. How do we make the argument that this is the redistribution of wealth that is needed? And companies maybe see it sooner than the individuals because they're working in those countries. But if each of you could give some little thought to one action that we might take to make a convincing argument to populations that this is the way it should go, I'd be grateful.
It's a really tough question that you're asking. I mean, a company like Unilever actually has to go where people are because we sell consumer products. So we don't really have a choice to just stay in the UK. But the way that we behave in conducting our business in those other countries should not be any different to how we conduct business at home, and should perhaps even go further than that in terms of taking into account the context. So if I bring it back to tax just for a moment, if we are dealing with a tax audit in a lower income country, we would probably assume that the tax authority is not necessarily going to start at the same place in their understanding of business that HMRC would stand in. And so we help them to get to be able to be in a position to actually ask the right questions. So that's a change in our behaviour, taking account of different circumstances.
And one, your consumers here just don't know about it.
No, but in terms of, can we choose to pay more tax by changing transfer prices so that more of the tax is paid in one country versus another? Well, the simple answer to that is no, you can't, because you have to apply the transfer pricing rules. Now, they can get challenged, and they often do get challenged, but it's not for a company to say the taxpayers, the people in one country deserve more of the pie than the people in another country, because, I think you're playing the role of an arbiter, really, there, where you don't have a place in doing so, I would say.
Anybody else want to comment, or should we go to the audience?
No, let me comment just briefly. Can you hear me? I actually have complete sympathy for you now. I could not hear almost anything that was being said before. So I will speak up and project. It won't have escaped your notice that whatever my personal beliefs, when it comes to trying to coordinate business views, I try to pull people towards the center. And I am therefore happy to be an incrementalist, however unexciting that may sometimes sound, because I do believe that half a loaf is better than none. In this area, my personal view is that 0.7% of GDP is absolutely what we should be doing. In fact, that is the baseline for what we should be doing. I equally understand that not everybody agrees with that, and I'm not sure that I can necessarily persuade everybody of that. So what can I do incrementally to help with that? Well, let me talk about one of the things that the OECD tried to do. The OECD is the Organization for Economic Cooperation. Described by The Economist as a rich man's think tank. It's actually a little more than that. But it's the group in Paris which essentially is the standard-setting organization for taxation across the world. It gets criticized for not including developing countries enough. It's getting better about that. But it has been in charge of this large project for the past 4 years of trying to change the tax rules and trying to squeeze out the bad planning, trying to squeeze out, not trying to squeeze out, trying to improve the rules where, again, globalization got ahead of where the tax rules were. One of the things in this project was to trying to sort out a huge problem for developing countries and a minor problem for developed countries. And that was, when you have a headquartered company in a developed country, the tax authorities of that country require that company to charge to the entity in a developing country a certain amount of the headquarters charges, the costs, the stewardship, all of that type of stuff. And in that process, what we said to the countries, what we said to the OECD was, as business, we don't care what that number is, okay? We are happy to pay this or we're happy to pay that. But we actually agree that, the developing countries have a point in this that they are concerned about, but that we can't do anything about it because we are required to charge those numbers out. So why don't you come up with an agreement about what that number should be? And if that number is very low, if the number is relatively high to a developing country, we'll pay that so long as you don't charge it to us again. The developed countries would not come to an agreement with the developing countries. Business can play a part in that. I believe that we will go back and revisit that issue until we get a more satisfactory result. It sounds small, it sounds incremental, it sounds slightly boring, but I think those are the sorts of things that we can do, which in the end will make a difference.
I'm just going to hold this because it was very uncomfortable. I would agree with what Will said there, but I guess it brings me back to my original point, which is that there are two elements to this. There's focusing on government-led reform and the rules and improving that system, and then there's the flexibilities within it and the choices that businesses can make. I think that those flexibilities will remain, even if we do create a better system. So there will be that element of business choice that's always there. So these questions of morality do come into it. But in addition, we're not at that stage yet where we have we can push for better rules, we can work together towards them. In many cases we do, but we're not at that stage yet. And in the meantime, some of these questions do need to be addressed because developing countries are losing out. There are a couple of points that you made earlier which I'd just like to pick up on. The first was the reference to sort of charity and the views among some that charity begins at home. I'd just like to emphasize that what we're talking about here, really, I don't see it as a charitable issue at all, because this is about taxation. It's about an obligation. It's not a voluntary contribution that companies make. There was a case actually a few years back of Starbucks was getting a tough time in the press in the UK for alleged tax avoidance, and its response, which I assume was concocted by its PR team rather than its tax team, was to make a voluntary contribution. I think it was in the region of £10 million to the UK, 20 to the UK Exchequer, as if that would make the story go away. And it flat out failed, not only because the sum was small compared to the alleged amount of money that the company had avoided in tax, but also because people aren't interested in companies making voluntary contributions. They want companies to pay what they owe in the same way that they do. Second, and I'll be very quick, is you talked about redistribution between the developed world and the developing world. Crude categories, but we'll use them for the purposes of this debate. I wouldn't even say that it's about that. This is not about artificially shifting money from wealthier parts of the world to the poorer parts of the world via the medium of businesses. That's not what we're pushing for. What we're pushing for is a system whereby the flexibilities in the system that allow businesses, in some cases, to pay less in the developing world, where the revenue is needed much more acutely. We're arguing that those flexibilities need to be addressed and that that's no longer a possibility, but it's not about artificial redistribution from north to south. That's a separate debate, in my view, an important one, but a separate one.
It's not artificial, but it doesn't leave more for the Northern Hemisphere taxpayer if you don't pay your tax in the Southern Hemisphere.
There are tax avoiding companies in the global south as well as the north, I would say. But yes, yeah.
And please remember the acoustics in this building is rubbish, so yell anyway, okay?
Hello. Sorry for slightly nebulous thought, but it seems to me that taxation is largely based on identity. If you're a mechanic in California, you are taxed as a mechanic in California. And it seems as these increased synergies and businesses and tech businesses and huge conglomerates come along, and as they become increasingly globalized, that identity on the company level is decreased. Ford was rather like our mechanic in California, a motor company in Detroit. I would be interested to hear what you thought the identity of companies would be in the future and how that would play into the tax space.
Hi. Do you think actually some of this moral responsibility lies...
Sorry, can you speak up?
Oh, sorry. Yeah, okay. Okay. Do you think some of this moral responsibility actually lies in the hands of us, the consumer?
Could you repeat that, because I didn't.
Do you think some of the moral responsibility for tax lies in the hands of the consumer?
John Arnold of ECCR. I was very interested by Will's comments about the 3 steps, tax policy, putting it into law, and then administering it. How good are companies at lobbying government for tax systems that suit them better than perhaps it suits the society in which those companies are operating?
All right, you have 3 difficult questions. I will let you choose how you want to take them in which order, but I would ask you not to avoid questions any more than you would avoid your texts.
Okay, well, I'll start this time. And I will continue to speak up. Sorry, just remind me. So taxation based on identity, that's a really interesting point. And I'm not sure I have a total answer for you, but I think the one thing that is becoming clear is that there are a cadre, if I can call them that, of very global companies who may well be rooted in their home jurisdiction, but don't appear to be rooted elsewhere. And many of those are in the IP or the digital space. And I think, I'm not going to say what their identity will be because I don't think we can tell. What I can tell you is that this is an area which needs to be looked at, and furthermore, it is an area which is beginning to be looked at. It was partly looked at in relation to this big project that I was telling you about at the OECD, this BEPS project. But it's now also being looked at more broadly in relation to actually what does this new digital thing look like? Because it's a term that we use with, again, I mean, I was saying before that there were some terms which are a little fluid. This is another of those very fluid terms. So we need to begin to scope this out. And I'll come back to that in answer to John's question, which is a very good one as well. So moral responsibility for tax in the hands of the consumer. I worked for a B2B company, so I probably have less to say on this than Janine did. But you know, I think in the same way that I said that I wasn't sure that morality and ethics were the way which should guide, for example, the administration of the law. I think that should be, you know, that should be as objective as we can be. At the same time, as individuals, if we don't respond to what we see, then what are we? I mean, we have a responsibility to be as informed as we can be, and we should be no more stirred up by The Guardian than we are by the Daily Mail. But at the same time, if we can establish that and we have a feeling about it, then as human beings, we should express that. Again, I'm not entirely sure that answers your question, but I do think that we regard ourselves as being totally economic actors. And in fact, I mean, you know where I come from on this, even though I'm not wearing a clerical shirt. I mean, there is more to us than that. We have a responsibility to each other. We have a responsibility to be in relationship with other people. And that means that we have to think about these things, and they should affect us. It doesn't mean that we should, be popping off the whole time about, well, that really annoys me, so I'm not going to do that. No, it's not that. But at the same time, if we ignore our context and we ignore the people around us, then what are we? We can become atomized. We're not solely economic actors. And then there's this really interesting point about lobbying by companies. Obviously this is my day job, okay? So I'm very aware of that. There need to be boundaries around that, and some of those boundaries are provided by transparency. They're provided by things like lobbying registers, which make very clear what's happening, or make clearer anyway, what's happening. But the other answer, and this goes to what Ewan said about what I said at this other conference the other day, which is that I actually think, and this has been my experience, again, going through this OECD process, there have been lots of public consultations, and all of the stakeholders have been in the room. And that, to me, is the way to do this. Let's get all of the stakeholders in the room, rather than trying to shut all of them out of it. It is a process into which facts need to be fed, but it certainly shouldn't just be one set of people who are doing that. And it should not, and this is almost as important, it should not be perceived that it's just one set of people doing that as well. So I think it's a really important point.
I think on the question about consumers, I guess for me that's individual choice. Some people like to be activist in the way that they consume and buy, and others don't. And I think that's up to them. But what I would say is that the public at large have been hugely powerful in catalyzing change in the global tax system. It was through public outrage, which, yes, admittedly might have been stirred up by, the press and so on. But it was through public pressure that a lot of the changes that we're now seeing to the global tax system, which, might not be perfect in our view, but are steps forward, it's through public pressure that those things largely came about. So I think there's an important role there. On the question about companies lobbying governments, I think the first thing to say is that we cannot generalize about the private sector. Companies act very differently. Some adopt responsible approaches, and some very much don't. I think the point that I'd make is that we've seen controversy in this country where there was a settlement between HMRC and Google recently, which we don't really know the details of because it was behind closed doors. But there was a outcry about the overall sum that Google paid ultimately, following a negotiation with HMRC behind closed doors. I don't know whether it was the right amount or the wrong amount of tax that ultimately got paid, but I do know that HMRC is a sophisticated, reasonably well-resourced revenue authority that is capable of having these conversations with the likes of Google and fighting their corner. That is not necessarily true in the developing world. Janine said earlier that Unilever's sales make it about the same size as a country like, was it Croatia? Well, okay, so take a country like Croatia, is considerably larger and wealthier than a Malawi or a Lesotho or a Togo or countries like that. When multinational companies are sitting in a room at a boardroom table opposite revenue authorities in Malawi, that's a slightly different situation to Google versus HMRC. The level of capacity that they have is just worlds apart. The level of expertise is often not there. In effect, what I'm saying is it's not a fair fight. So companies in those situations, in those contexts, have a huge amount of leverage and power, and I think it's vital that there are systems in place and parameters that prevent abuses from taking place. Lots of companies don't seek to abuse the system, but some do, and owing to their size, they're capable of it as well.
Yeah, I'll be very quick. I thought they were all really, really good questions. So tax following identity and the context of that in globalization. Well, tax treaties have their roots in bilateral arrangements. So if you're like Unilever based in the UK and you're transacting with another company, another organization, say in France, then it's the UK-France tax treaty. I think that's rapidly losing relevance. I'm not sure what the answer is, but I think where you've got large groups that create synergies, have large amounts of intangibles, and it's not just the digital sector. Unilever's biggest assets are its brands. Then I think there perhaps should be a different way of coming to a system of allocating income amongst all of those different countries. But whether you allocate it based on sales, whether it's on assets, whether it's on employees, or you do something else, there really has to be international agreement. Otherwise, all you'll end up with is a free-for-all, which doesn't really drive anything further forward. So something that needs to be worked on. Moral responsibility for tax in the hands of the consumer. From a personal perspective, I totally support that. It amazed me that when Apple were in the news or Google were in the news, it has zero impact on their sales. I mean, people just love their products. You don't stop using Google. So how far does that really go? And then on the question of tax policy, I would just give you the example of the pasty tax and also the changes to self-employed national insurance and income tax arrangements. They were two examples of things that were done without consultation. Why do you have consultation? Because it allows different points of view to be brought in to create better tax policy. These were things that weren't thought through, that missed important inputs from different parts of the spectrum, and not just taxpayers, but other parties as well, to ensure that what the government's actually trying to do does actually achieve what it's what it's wanting to do. And so I think it would be wrong to freeze companies or other taxpayers out of that process. But Will's absolutely right. You need the governance there to make sure that everything that's happening is above board, but the process is a very valuable one.
Andrew Goodall, Tax Analyst, which is a US website. There's some concern, still some concern among businesses and tax professionals about the state of the public debate on tax avoidance, despite events like this one, worthwhile events like this one. Given the complexity, I'm thinking of allegations of avoidance perhaps easily made, not so easily rebutted because of the complexities involved, which Janine has described, particularly for multinationals operating in several countries. So given that complexity, would mandatory publication of country-by-country reports of profits and taxes help bring clarity or make matters worse?
This is predominantly a question for Will, but I think the others might have something to say as well. He was trying, Will, sorry, you were trying to distance yourself from the moral question and the fact that you were an ordained minister within the Christian church. The principles of taxation introduced possibly before, but we understand from Old Testament times when it was a way to make sure you cared for those who were not able to care for themselves, is a moral question. And that's where we still are. In the answer to one of the last questions, Ewan talked about the honesty of people whose businesses are bigger than some of our developing countries. Honesty and caring for your least able are ethical, moral issues. Can I have a go?
And what I'm going to suggest to you guys, if you will, is if you each take one, but if you each take all three, nobody's going to get a drink.
I think I know mine. So.
I'll stand up and project. Alicia Weston, I work for the New Economics Foundation, and I also run a not-for-profit. I also used to be an investment banker. I was an institutional stockbroker for 18 years here in the city. And just an observation to start with to, Ewan. You mentioned stakeholders and how companies are not just obligated to shareholders, but to stakeholders as well. I worked for 18 years as an institutional stockbroker, and I never heard the word stakeholder, only shareholder. Okay, so this is what you are up against. The question I have, which is probably a good one to end on, really, is I'm quite out of touch with what's going on a global basis, and I was quite alarmed by the whole Brexit thing of us starting to undercut everyone else on tax, and the global coordination on tax and what's going on and what might be coming up in the future. And I'd really like to hear from you, because you are apparently experts. So what has been achieved over the last, say, 3 or 4 years where this has started to become a big issue, and what can we look forward to hopefully being achieved? And is there something maybe that we could put pressure on people and say that's a good thing and we should be pushing for that? What can we hope for realistically in the next few years, please? That's true.
Over to you guys.
I'm going to take the biggest question last. So.
Okay, so I'll do the public country-by-country reporting then. I think I've already explained that some of Unilever's biggest assets are its brands. They're intangible assets. So actually, they would not appear on our country-by-country report, because the assets that appear on that report, so for those who don't know, You would report by country your sales, profit before tax, tax paid, assets, employees, and it's designed to be given to tax authorities as a risk assessment tool. So they can basically, it's my Croatia example, basically have a picture that helps them to understand which parts of Croatia we're making our money in. So, but for Unilever, in our case, our intangibles are not on our balance sheet. So whilst that might provide some information, it's really not going to drive the whole story and the whole picture. So what's wrong with publishing it? Well, we do publish some information already, but we publish it in a way that we think is meaningful. So in other words, we don't publish our country-by-country template. We talk about the areas of the world where we pay most taxes and give a rough split of which regions those taxes are paid in. So it gives people an idea, and we talk about, well, what are the value drivers in our business? So we feel that's more meaningful for helping public understanding than just publishing the template would be by itself.
Well, I think I know which question Will's going to answer, so I'll answer yours, Alicia. Future of tax post-Brexit. Well, I mean, difficult to say, certainly. A lot of known unknowns. The first thing, I guess, is that many of us, including NGOs, are guilty of thinking that that the government has not done nearly enough to try and tackle tax avoidance, and that is our position. But I think it's worth bearing in mind that the UK government specifically has actually played a bit of a leadership role in putting issues of tax avoidance on the global agenda. It started really back in 2013 when Prime Minister Cameron put it on the agenda for the G20 when it was in Northern Ireland, and a lot of the work that the OECD's done, including the work that Will's been involved in, has spun out of that. And the rhetoric, I guess, continues to match that from before, from this new government. Prime Minister May's first speech on the steps of Downing Street upon becoming Prime Minister focused quite largely on tax avoidance by corporates, which I think took many of us back. So, you know, it's still on the agenda. I think where there's a danger from where I'm standing is, and we've seen this in the developing world with the subject of tax incentives, is that competition between different countries is fueling what we talk about being as a race to the bottom. They see their neighbors offering a particular incentive to such and such a company to come and invest, so they then undercut them with a different incentive and all these sorts of things. And ultimately what happens is that tax rates just get lower and lower, and there are more and more exemptions and tax holidays and so on that ultimately don't really drive investment. They just create a system where countries are competing with each other and losing revenue as a result. And we might, particularly if the UK took steps to cut its corporation tax rate further, which I don't think is going to happen, but might happen, we might see something similar happening between the UK and Europe, and the American administration is talking about cutting corporation tax quite substantially as well. Frankly, I think that's a bad thing for a number of reasons. Tax competition in itself is not necessarily bad, but if we do have a situation where every country is just constantly trying to undercut each other, its tax ceases to be an incentive, and ultimately is just about lost revenue. As I say, we've seen that in the developing world, and it's quite harmful. And I think an important point to make here is that actually, on this issue, I think a lot of businesses agree with us. If you ask, I can't speak for all businesses, but if you ask businesses, many businesses, what they'd like to see from the tax system in the next few years, it's not always just a lower rate. It's more stability, it's more certainty, it's the ability to plan ahead for the future. Same applies in the developing world. You know, do you just want another tax holiday? Do you just want another couple of points off the income tax rate? The answer is generally no. It's no, we want certainty, so that they can make their investments with a greater understanding of what their liabilities and costs are going to be further into the future. So, yeah, answer is I've got no idea, I don't know, but there are opportunities and threats ahead.
Okay, so I'm going to try to answer this, and I'm going to use 3 biblical props, if I can, to try and explain. And these are not in order, and the last one is almost certainly not right, because unfortunately I put my phone somewhere else, so I couldn't check my citation. But the first, I think, is Matthew 25, so it's a parable of the sheep and the goats. The second is the beginning of Genesis, about a creator God. And the third, I think, is in Corinthians, but I'm not entirely sure. And I'm certainly not sure which one, about eating meat or not eating meat. So let me talk about those. So the first is that as a personal obligation, the passage in the Bible which speaks more strongly to me than any other is the parable of the sheep and the goats. It is about, what did you do for the least of these? What did you do when they were hungry? What did you do when they were starving? That is, without doubt, a moral obligation. It's an obligation of individuals, and I believe it's also an obligation of society. We can argue amongst us as to what the balance between the individual obligation and societal obligation should be. There are some who think the welfare state has gone too far. There are others who think it should all of that stuff. That is irrelevant to this conversation. There is that obligation. And that obligation can undoubtedly be met by the raising of tax. And as I hope was clear in my sort of, my 3-part life cycle of tax, in that first part, that is a crucial consideration. Okay, so that's point 1. Point 2, and this is, about this, I have probably more argument and pushback than even on the issue of tax, which is the idea that in some way God could actually be interested in the world of work, and that work, and even for-profit work, might have something to do with God. I believe that fundamentally. I really do, and I'll argue about that for as long as you wish. Again, you don't have to completely accept my terms here. What the story of Genesis tells you, and to be very clear, I take it metaphorically, I don't take it literally. What the story of Genesis tells you is that work was important to God, that something went wrong, you can call it sin, you can call it the fall, you can call it whatever you want, which meant that perfection had disappeared, and that we find ourselves in this situation where work can be good, it can equally be bad, and aspects of it can be good and they can be bad. We have a responsibility, I believe, to work towards, if I start at the beginning and then go right to the end, we have a responsibility to help towards something which we can never perfect, but which we can make better. And then the final point is I've been doing this, give or take, for 30 years now. And I learned a very long time ago that if I spoke about things in moral terms, I would lose more than 50%, and quite often more than 75% of the people that I was talking to. That has become even worse since I became a priest, because people assume that I must be sermonizing, that I must be lecturing them. And therefore, I'm very careful about the language that I use, because what I want to do is to pull people towards a place where they can talk to other people and understand other things. So that's the Pauline reference. If eating meat makes people feel better, even if it's being passed in front of idols, then I'll do that. If eating meat really offends people, even though we know that the idols aren't God, they're just things of stone or gold or whatever, then again, don't eat meat. And that is the position that I'll take on this. But I believe as a fundamental responsibility to go back to my first Bible quote, that we have an absolute obligation to other people. And we must exercise that as well as we can, and as well as and in whatever way we see fit, so long as we're serious about it. And that requires people in all walks of life, not just people in dog collars, at the altar rail, to lecture people, and not even just good people, reaching out and doing that work. It requires all of us to play a part in that, and I believe that fundamentally.
except that I would ask you to thank our panelists and join us in the back of the church for a drink afterwards.